Good morning and welcome to Market Day Report. I'm Chris Swift and Merry Christmas. I'm anxious to see what the opening bell is, but let's take a look at what happened overnight first, see how we closed the corn market, and then we'll get ready for the opening bell here in just a few minutes. And looks like March up 3/4 at 473 1/4. Pretty tight range there, 474 high, 471 1/2 low. May up 1/2 at 485 3/4, and July up 1/2, 495 1/2. See what our soybean market was doing. It's a little bit softer yesterday, regaining some of that today, up 4 1/4 on the Jan, 1301 1/2. All the contract months back above 13. March at 1306 1/4, up 4 1/2, and out to the July contract up 4 1/4 at 1323 3/4. Chicago wheat this morning, kind of mixed, but up 2 on the March, 614 1/2. May up 1 3/4, 625 3/4. New crop July, 633 1/4, up 1 1/2. Kansas City hard red winter wheat, a little bit firmer, up 3/4 on the March at 627 1/2. May up 1 1/4, 631 1/2. New crop July, 633 1/4, up 1/4. And we'll wrap it up with Minneapolis spring wheat, up 3 cents on the March contract, 717 1/4. May up 3 1/4 at 727 3/4. July up 3/2 at 736 1/2. Got my guest Brian Hoops this morning. He is with Midwest Market Solution. Brian, Merry Christmas to you. Hope everything is well there. Anything really exciting to look forward to today?
Hey, good morning, Chris. Well, I don't know if it's a real exciting day on tap. We do have holiday shortened trading weeks coming up in the weeks ahead. Options for January go off the board today, and because we have a 3-day weekend coming up, probably going to see a lot of kind of positioning. I think for the grain markets, we've had a pretty far fall this week in corn hitting contract lows and soybeans breaking some support, testing the $13 mark in the March contract, and pretty disappointing price action as the market reacts to increased weather chances for South America. The news this morning is pretty limited as far as anything according to the grains, with no private export sales or anything else. And so you look at the inflation numbers that came out earlier this morning, PCE numbers, maybe kind of a surprise to the positive that inflation is starting to come down even a little bit more. So that means you're seeing a likelihood of lower interest rates in 2024. Market, of course, is anticipating that, and that means the U.S. dollar is breaking to new lows this morning. So lowest level since mid-August for that dollar, which in the long term should be friendly for corn, soybean, wheat exports. Our beef and pork exports should improve as well. So that is something I think kind of the trade is watching for, is the fact that this dollar is breaking should give us better exports. And then the fact also that you've probably dialed in a lot of this rain that's expected to fall here in the near term for South America. And with a 3-day weekend coming up, a bounce is likely.
Yeah. Brian, it confuses me a little bit because we talk about lowering rates and that's stimulating, and we all look for that and a lower dollar going down and hope to stimulate. But the kind of unfortunate of that is the reason that it's going down is because we need to stimulate. So it's kind of interesting. It's a toss-up between whether it's really that bullish or whether it's actually very bearish that we're actually having to stimulate again. So, anything in the wheat market that you see out there? I know that it's been pretty dormant here lately, and a little bit of rain coming in there. Do you see anything there?
The wheat crop in the Southern Plains off to a tremendous start, much improved over the last couple of years, and that's pressured the Kansas City market specifically. We've seen the spreads between Chicago and Kansas City kind of collapse to where new crop is now about par. And that's pretty untypical for this time of year. Usually you get some sort of weather issues or something that'll push Kansas City back higher. The demand news has been pretty quiet. We had, big sale this week of Russian wheat was purchased by Egypt, about 480,000 metric tons. Other than that, it just remains quiet. That wheat market here just struggling to find any price levels that'll stimulate some demand. We saw China, a big buyer a couple weeks ago of soft red wheat in the U.S., but since that time, things have gone very quiet on the world front.
And any aspects of improvement for the rail halting right now?
Yeah, that shouldn't last more than a couple days, I wouldn't think. And if it does, it could be detrimental, especially to the corn market, because so much of our corn is being shipped through rail to Mexico. They're number one buyer by far and away this year. Their exports over last year up over 45% and over 2 years ago, another 20%. So it's a big customer, biggest customer by far. And so it could have really detrimental effects to corn futures, but also local basis levels as some of these elevators and plants may start to back away if their rails get full and are undeliverable into Mexico. So it's something that really bears watching from a longer term perspective.
Absolutely. Well, it's always a mess somewhere. Brian, stay with you. We're going to take a real quick commercial break. We'll be right back. We're talking with Brian Hoops. Stay with us. Welcome back to Market Day Report. Kind of anxious to see how the livestocks are going to open this morning, and they started. We'll start from last night's close there. The December contract was up 52 at 170.55. We expire here in just a couple of days on the December contract, and we're right at the 170 level for the cash, so an even basis as it should be. They always converges at expiration. February down 162 at 168.67. April down 165 at 172.17, and out to the June down $1.42 at 169.87. The feeder market was a little bit softer as well, down 235 on the Jan at 221.70. March down 237 at 223.37. Out to the May contract down $1.85 at 232.97. And the hog market was kind of mixed yesterday. Front end up a little bit higher. Feb up 42 at 70.65. April up 2 at 76.95. And out to the June contract down 35 at 91.90. My guest this morning is Brian Hoops at Midwest Market Solutions. Brian, I know we got some reports today and not going to be able to trade those reports until Tuesday. A little window dressing for today before those reports?
Yeah, most likely, Chris. We really haven't seen much in the way of any cash trade this week. In fact, bids at 170 are being renewed this morning. So there's an incentive, I think, to try and get some cattle bought here ahead of the late day weekend. But yeah, you've got a lot of reports, cold storage, quarterly hog and pig report, cattle and feed report. And, that cattle and feed probably looks to be the most prominent in market moving on Tuesday morning. We'll be looking at placements, I think, down this month, probably down in the next month. So, we saw weakness in the futures yesterday, probably going to be fairly short-lived with that cash trade trying to develop and maybe some hedge lifting as the day goes on, as well as that cattle and feed report coming out later.
And we know we saw the feeder cattle market pretty soft there, but it's picked up probably close to $13 to $14 off of the lows there. So it might have a little bit of room to fluctuate there. And we're probably not going to see the index do much of anything for the next couple of days simply because all the sale barns and stuff are shutting down. Do you see anything right at the first of the year that might catch your attention?
Yeah, maybe not right at the first of the year. I think the big thing that we're watching and observing over the holidays is how the cutout values react to the holiday shortened kill weeks. We've got, Christmas, New Year's, where we reduce our kills. That normally props up your box beef, and that's going to be key because packer margins, they're in the positive, in the $20, $25 a head positive range. But they really need to have more margins to work with to pay up if they're in the cash markets after the first of the year. So that, along with that inventory report, I think are things that the trade is really going to be paying attention to after we turn the calendar into 2024.
Absolutely. We'll be looking forward to that. Brian, certainly do appreciate you taking the time to be with us this morning. It's Brian Hoops, and he is with Midwest Market Solutions. So, Suzanne?
Good to see you. Good morning to you.
Absolutely. A pleasure.
We've got, of course, that report coming out later today.
Yeah, got 3 of them today, and they're going to be pretty big. And everybody have some time to digest them over the Christmas holidays. And
think people are going to be paying attention? Hopefully.
I don't think so.
No.
I don't think it's really going to be that big of a deal.
Okay.
So
thank you, Chris.